Hi guys, welcome back. Nvidia reported another quarter of record revenue of $7.1 billion, that is 50% higher than last year. Nvidia is firing on all cylinders with record revenues in their gaming and data center segments and was further boosted with record revenues in their visualization segment. Visualization is another use case for Nvidia's GPU as it is a compute intensive segment and requires high quality real time image rendering. It is used in mapping technologies similar to Google Maps that provide a smooth user experience as users pan and zoom to find shops, parks, and places of interest. The markets cheered and pushed their stock price up from 292 to close at 330 for the week. And the outlook for the next quarter's revenue is $7.4 billion, an increase of 48% year over year. It is no surprise that the markets like the results. Let's go through the results in detail to see whether Nvidia is still worth investing in at current prices. There is no let up in Nvidia's revenue with quarter on quarter and year on year growth. The cost of goods sold has also increased as expected. The gross profit keeps going up and came in at $4.6 billion in the most recent quarter, and the gross margin has also improved further to 65.2%. The operating expenses have been rising with a sizable jump in research and development. Sales and general admin has largely remained flat. We can expect more good news to come from Nvidia with a continued investment in R&D. The net income is higher at $2.5 billion, but it is not seeing the same jump that we saw in gross profit. Most likely, it is due to the increased R&D costs. The earnings per share is also spotting the same trend. The PE ratio at the current price of 330 is 101. That is a very high PE, and even with continued revenue growth, it is hard to justify these price points. Let's give Nvidia a high PE of 25 due to its robust growth. At the earnings per share of 325, the fair price is only $81. Furthermore, the insiders are selling the shares for the last 3 months, including a big sale by the CEO, Jensen Huang. The PEG ratio is a high 2.02, making Nvidia overvalued at the current 330. The operating cash flow remains strong but has dropped to $1.5 billion due to changes in working capital. The capex is flattish, and with that, the free cash flow came in at the lower $1.3 billion. The positive free cash flow has improved Nvidia's cash position with net cash of $5.6 billion, giving it a strong liquid position with a quick ratio of 5.3. The balance sheet is also strong with growing assets and reducing liabilities. I just want to mention a few items here. The accounts receivable has been rising and is at $4 billion. I find that is quite high for revenue of 7.1 billion. That is about 56% of revenue. The other significant item is long-term debt. Nvidia took on a debt of $10 billion in the last 2 quarters to partly fund the ARM acquisition. But now that their cash holdings are increasing, Nvidia has started to pay off the debt. The price action has accelerated in the last 2 months. Usually, the share price moves up in a steady trend channel, like the orange channel here. Strong companies will accelerate with increasing revenue and profits, as depicted by the blue channel. Then comes the exuberance where the market goes crazy and pushes the share price in a parabolic rise. And that is what is happening now. I'm not a fan of chasing stocks in this manner. While Nvidia is firing on all cylinders and has a strong outlook, it is simply overpriced at the current 330, and I also do not want to be drawn into the exuberance. I'll have to pass Nvidia at the current price. I hope this sharing has been useful. Do subscribe if you want more of such videos. Have a profitable week ahead, and I'll see you in the next one.